Inflation in the U.S. economy is on the retreat. But the road to ultimate victory may be harder than what's come already, some economists argue. The so-called last mile is going to get a lot trickier. Mohamed El-Erian, chief economic advisor at Allianz and president of Queen's College at the University of Cambridge, recently told CNBC, "We're not going to have the tailwinds that we had, and we're going to have some headwinds," he said. Inflation measures how fast prices are rising for goods and services, anything from concert tickets and haircuts to groceries and furniture. Policymakers aim for a roughly 2% annual inflation target. The Consumer Price Index, a key inflation barometer, has fallen gradually from a 9.1% pandemic-era peak in June 2022 to 3.4% in December 2023. Within striking distance of the target. This final disinflationary hurdle will be a challenge without curtailing economic growth and risking recession, a dynamic that would likely crimp consumer demand and rein in prices, economists said. One theme is clear. The transition from 8 to 4% inflation is easier than the transition from 4 to 2% inflation. Gargi Chaudhuri, head of iShares investment strategy for the Americas at BlackRock, wrote about the recent CPI report. This difficulty with reducing inflation is largely centered on the services side of the economy, according to economists. Think of services as things we can experience, like rent, auto repairs, haircuts, veterinary visits, theater tickets and medical care. Goods, on the other hand, are tangible things like cars and clothes. They account for 21% of the Consumer Price Index, after stripping out items in the food and energy categories. More from Personal Finance. Why egg prices are on the rise again. A 12% retirement return assumption is absolutely nuts. Here's where prices fell in December 2023. In one chart, inflation among these so-called core goods peaked more than 12% in 2022 but is now near zero as supply chains have normalized. That means further broad disinflation likely won't come from consumer goods, economists said. In fact, attacks by Houthi rebels on ships in the Red Sea threaten to disrupt a key transit corridor and may trigger higher goods inflation if it persists, El-Erian explained. Inflation among services has been more stubborn, though, and consumers spend more on services, which account for 59% of the CPI, after stripping out energy services. While down from more than 7% last year, services inflation still sits at 5.3%. A big reason for that persistence: housing, which accounts for more than a third of the overall CPI. The shelter inflation component is the part that has remained quite sticky, Chaudhuri said in an interview. Economists expect shelter inflation to moderate. It's just a matter of when and how quickly it happens.